Let's address some frequently asked questions regarding SARS Auto Assessments. An auto assessment is an automatic tax assessment issued by SARS to selected taxpayers. SARS leverages data collected from employers, financial institutions, medical schemes, retirement annuity fund administrators, and other third-party data providers to generate this assessment automatically without direct input from the taxpayer in the initial stage. You should receive an SMS or email notification from SARS informing you that you have been selected for auto assessment or that an assessment, or also called an ITA 34, has been issued. SARS has communicated that these notifications will be dispatched between the 7th of July and the 20th of July. For 2025 tax season, while SARS issues auto assessment notifications to taxpayers between the 7th and 20th of July, there isn't a separate earlier deadline to formally decline an auto assessment. If you receive an auto assessment and disagree with its contents, perhaps it's incomplete or incorrect, your course of action is to file your own income tax return. This manual submission, which effectively overrides the auto assessment, must be completed on or before 20th of October 2025. This date aligns with the standard filing deadline for non-provisional individual taxpayers. Therefore, while you may receive your auto assessment early in July, the window to correct it by filing your own return extends until the general non-provisional tax deadline. It's advisable to act promptly if you intend to make changes, especially if a refund is due, as SARS processes auto assessment refunds quickly. From an accounting perspective, it is strongly recommended against simply accepting your auto assessment without a thorough review. There are inherent risks of inaccuracy, which could result in an incorrect tax liability or a missed opportunity for a legitimate refund. An auto assessment may be inaccurate due to several factors. SARS may not have received all your tax certificates from relevant third parties. The tax certificates SARS has received may not be the most up-to-date versions. The auto assessment will not incorporate certain deductions you may be entitled to claim, such as wear and tear allowance, home office expenses, donations to approved charities, travel expenses, or out-of-pocket medical expenses not covered by your medical aid. It also may not include income from other sources such as rental income, freelance work, or capital gains from asset sales, if these are not reported by third parties. If you have received a refund based on your auto assessment, you can still file your comprehensive tax return once the broader tax season opens on the 21st of July. Filing a complete return allows you to include all applicable income and deductions, potentially optimizing your tax position. Upon submission of your revised return, SARS will issue a new assessment, an ITA 34. If your revised return includes additional deductions, this typically results in a lower tax liability, leading to an additional refund from SARS covering the difference. Conversely, if you declare additional income, a tax payment to SARS may be required. No, you are not exempt from penalties or legal action. It remains the taxpayer's ultimate responsibility to ensure all income and expenses are accurately reported to SARS. Should you accept an auto assessment that fails to declare all your income, SARS retains the right to levy a penalty of up to 200% of the additional tax payable plus interest if an audit subsequently uncovers the undeclared income. Should you miss the deadline, you must submit a request for extension via eFiling, providing a valid justification for the late filing. It is critical to ensure your personal and banking details are up to date with SARS. Incorrect banking details can delay or prevent refunds, and outdated contact information may mean you miss important notifications, including auto assessment notices. You can update these details easily via SARS eFiling or the SARS Mobi app. On eFiling, navigate to My Profile, and then Profile and Preference Setup to update your security contact details, or use the Update My Personal Income Tax Bank Account option for banking details. If both your email and cell phone number have changed and you cannot log in, you may need to contact the SARS call centre or visit a branch by appointment. No, a change in personal administrative details like your address or phone number does not automatically mean you need to disagree with or reject your auto assessment regarding your income and deductions. These are separate processes. You only need to disagree with your auto assessment if the financial information, like the income or deductions used to calculate your tax liability, is incorrect or incomplete. So you would update your personal details separately, and then if the tax calculation itself is flawed, you would proceed to reject the auto assessment and file your own return. For the 2025 tax year, SARS has broadened the scope of auto assessments to include certain provisional taxpayers. However, this is by invitation. If you are a provisional taxpayer and have not received a notification from SARS inviting you to an auto assessment, you must still file your provisional tax returns as usual, and your annual income return ITR 12 by the provisional tax deadline of January the 19th, 2026. We trust this information provides clarity on the 2025 SARS Auto Assessment process, including how to manage your tax data and personal information. Diligent review of your assessment is paramount, and the timely submission of a corrected return, if necessary, is essential for compliance. For comprehensive and official information, always refer to the SARS website. And if you have any further questions, please feel free to post them in the comments section below, and we will answer them in a separate session.